Okie dokie. So in this video, we will be discussing about hammer. It's hammer time. So anyway, hammer looks something like this. Okay, so just let me walk you through the how it works, right? So basically, for a hammer candlestick pattern, the price opens at this level over here. It opens, and then the sellers quickly came in and took control. And you can see that the price is being pushed all the way down lower till this absolute low over here. And then what happened is that the buyers, the bulls, came in and take control back from the sellers and push price all the way back up higher, and finally closing near the highs of the day. So this price pattern, this candlestick pattern is essentially telling you that there is a tug of war between the bulls and the bears, and eventually the bulls have won, right? This is the sellers in control heading in this direction, and then finally the buyers stepped in and pushed back all the way back in the opposite direction, and even closing near the highs of this candle. So essentially this candlestick pattern is a bullish reversal pattern. Buyers are momentarily in control, right? Ideally, right, the length of the wick is at least 2 times the body. So how you want to define hammer is that this is the body, this little square rectangular shape, and this is the wick. So ideally, you want your wick to be at least 2 times the length of the body to to classify it as a hammer. Sometimes you may have a pattern that looks like this, right? Then this is not really a hammer because the wick is too short. So you want it to be at least 2 times, at least 2 times the length of the body. And the longer the wick, the greater the price rejection. This should be quite intuitive because the longer the wick, right, it tells you that the buyers have come a long way and push price back all the way up higher. So the longer the wick, the greater the price rejection. So over here, just let me point out to you a few hammer that you can see on this chart over here. So let's look for it together. I would say this is a hammer, right? The length of the wick is relatively long compared to the body. This is another hammer, another bullish hammer. This is another hammer. Where else? Let's see. Yep, I think that's the ones I'm seeing right now. There could be more over here that I may have missed out, but yeah, I think you generally get the idea of what a hammer is. And one thing to clarify is that you might have come across works or materials online that says that if you spot a hammer in the uptrend, okay, it's a sign that it's a sign of weakness, as sellers are stepping in. For this, I can't agree, because when you see a hammer in an uptrend, to me that is a sign of strength, because it tells you that there are sellers coming in, but eventually the sellers are overrun by the buyers and price has now closed bullishly higher. So to me, when I see a hammer in an existing uptrend, it's still to reaffirm me that the buyers are in control. So with that said, right, let's do a quick recap, right, of what a hammer is. A hammer is basically a bullish reversal pattern telling you that the buyers are momentarily in control. The length of the wick ideally to be at least 2 times the length of the body, and needless to say, if the wick is much longer than the body, right, the greater the price rejection. And last but not least, this is something that you should already be familiar with. Don't trade it in isolation. Okay, with that, I'll see you in the next video.